Good day, everyone. I am your teacher, Mrs. Pacaria P. Mangera, in Fundamentals of Accountancy, Business and Management 1. Our topic for today is analyzing and solving problems in business transactions. Our objectives are: the learners are expected to analyze the common business transactions using the rules of debit and credit. Number 2, to solve simple problems and exercises in the analysis of business transactions. All transactions are recorded in the accounting records using the double entry system. Under this system, its transaction is recorded in two parts, that is, debit and credit. Recall from our previous discussions that debit simply refers to the left side of an account, while credit refers to the right side of an account. So, business transactions are recorded in the General Journal, and General Journal is better known as Book of Original Entry. Why Book of Original Entry? Because the business transactions are recorded for the first time in this book. Let us do this activity. We have 5 multiple choice questions. Number 1. Which of the following has debit normal balance? Is it A, allowance for doubtful accounts? Is it B, cash? Or is it C, Kim Capital? What is your answer? Yes, the correct answer is letter B, cash. Okay, cash is an asset and has a normal balance of debit. And this is the first item in the asset account. Okay, how about allowance for doubtful accounts? Yes, it is credit because it is contra asset account. It is to be deducted from accounts receivable, and then whatever the excess is called net realizable value. Okay, how about Kim Capital? Definitely, this is credit because it is at the right side. Number 2, what accounts are affected in this transaction? Andrew deposited cash of 35,000 pesos as an initial investment to the business. Is it A, cash increase, equity increase? Is it B, cash increase, equity decrease? Or letter C, cash decrease, capital decrease? What's your answer? Very good. It should be letter A, cash increase, equity increase. Okay, remember that cash is debited if the company receives such cash. And since it is the initial investment, the equity is likewise increased. Okay, how about letter B? Cash increase, equity decrease. If your answer is letter B, then your accounting equation is out of balance because there is an increase in debit side, but there is a decrease in equity. It should be increase in cash, increase in equity. How about letter C? Why it is not correct? Cash decrease, capital decrease. This is definitely incorrect because cash is received and deposited to the bank for and in behalf of the company. So, it should be increased. And if the debit side of cash account is increased, again, the capital should be increased. Okay. Let's go to number 3. What is the normal balance of accounts payable? A. Debit. B. Credit. C. Sometimes debit. Your answer should be letter B. Correct. That is correct. So, remember that accounts payable is a liability account. That's why it has a credit balance. Let's go to number 4, which is the book of original entry. Letter A, General Journal. Letter B, General Ledger. Letter C, Subsidiary Ledger. Okay, your answer should be what? Yes, letter A. It should be General Journal. It is the book of original entry. How about General Ledger? What is that? Okay, that is book of final entry. How about subsidiary ledger? Okay, subsidiary ledger class is individual account that will support that balance found in the general ledger. For example, we have subsidiary ledgers for accounts payable. We have subsidiary ledgers for accounts receivable. Okay? So, those are the examples of subsidiary ledger. So, individual account, who are the suppliers? Okay. Who are our debtors? That's it. Okay? Number 5. Which of the following has a credit normal balance? A. Equipment. B. Cash. C. Kim Capital. If your answer is letter C, that is correct. Therefore, equipment and cash has a debit normal balance. Okay. Who got 5? Okay, very good. How about 4? Okay, that's nice. Okay, congratulations. Class, do you know that debit is a formal bookkeeping and accounting term that comes from Latin word debere, which means to owe. In bookkeeping, a debit is an entry on the left side of a double entry bookkeeping system that represents the addition of an asset or expense or the reduction to a liability or revenue. So, debit derived from the Latin word debere, while credit comes from the Latin word credere, which literally means to entrust. It's an entry on the right side of a ledger account that's abbreviated to CR. It is an accounting entry that is made when revenues, income, liabilities, gains, and owner's equity are increased, or when expenses, assets, and losses are decreased. To understand better what we have tackled, let us consider the acronyms for this debit and credit. The accounts under the debit and the accounts under the credit. So, if the losses, expenses, assets, and drawing are the accounts on the debit side. So, the normal balance of these 4 accounts are debit. So, let us consider lead. L for losses, E for expenses, A for assets, and D for drawing. Okay, so you can remember it easily. Losses, expenses, assets, drawing, debit. Okay, how about credit? You can use the acronym EAGER. Okay, E for owner's equity because of equity. Okay, and then G for gains, I for income, R for revenue, and L for liabilities. That's why eager. Remember that. So eager is credit. Owner's equity, gains, income, revenue, and liabilities. So let us start the ball rolling. Okay? Rules of debit and credit, left side or debit side, right side or credit side. Okay. Let's look at the figure. The man raised his both arms to the side, to his side. Okay? It is a horizontal and it is like a T, letter T or T account. So, some accountants use the T account to pause the transactions in order to determine the total debit and the total credit of an account, and then the balance. Assets are the value received by the business or what the business paid for. So in order to increase the assets, you're going to debit. In order to decrease in asset, you have to credit it. How about liabilities and owner's equity? So they are the source of the value received. So in order to increase in liabilities and owner's equity, you have to credit. And in order to decrease in liabilities and owner's equity, you have to debit. Okay. Note that the assets are on the left side of the equation, opposite the liabilities and owner's equity. This explains why increases and decreases are recorded in the opposite manner, as liabilities and owner's equity are recorded. So the equation also explains why liabilities and owner's equity follow the same rule of debit and credit. So what are the business transactions? Business transactions are economic events that affect the financial position of a business. So business transactions are exchanges of values like cash paid to acquire a motor vehicle. Business transactions are recorded in terms of money. Analysis of transactions is the process of studying a transaction to determine its economic effect in terms of money and the entity's accounting equation. Again, what is our accounting equation? Assets equals liability plus owner's equity. Its effect may be an increase or decrease in the assets, liabilities, and owner's equity. After the analysis, the equality of the equation is maintained because for every transaction, there is an increase and a compensating decrease. So, let us discuss the identification of event to be recorded. Remember that only the business transactions and events affecting the business should be recorded in the books. That is, if it affects the composition of either assets, liabilities, equity, revenue, or expenses, and there is a monetary amount that can be assigned to the event. Remember this. What are source documents? These are original written evidences containing information about the nature and the amounts of the transactions. So, let us discuss some common source documents that we are going to use in identifying the business transactions if it is legal and if it is for the business. We have sales invoice, official receipts, statement of accounts, delivery receipts, and validated deposit or withdrawal slip. This is the official receipt. When you pay the supplier, they issue the official receipt as a proof that you paid already. On the side of your company, this is issued to your client as proof that you received cash. The cashier issued it. The company should observe the internal control by counter-checking the booklet. Say, at the end of the day, the manager should sign at the back of used receipt and have tallied to the abstract of collection. Remember that every customer should receive it upon payment of cash. So this is the delivery receipt. Okay? So what is this? This delivery receipt is a support documents that you receive the purchases you have made based on the purchase order. So you have to inspect the delivered materials or goods if it is in accordance with your specifications and if what is written in the delivery receipt is the same with what is written on the purchase order. Okay? So class, look at the picture. This is an example of statement of account. So what is being written in the statement of account? It is the company who delivered the goods or items, who is the purchaser, your company, for instance, and then what was the date, okay, the summary of the transactions, and it is dated. What items did you purchase? What are the descriptions? How much? How many? And then what is the total due? And then you are instructed here to pay or there is an indication that you have to pay on time or otherwise you are going to incur additional expenses in the form of penalty. Okay? Again, the dual effects of a business transaction is recorded. A debit side entry must have a corresponding credit side entry, and that is what we call double entry bookkeeping. Analysis of business transactions. So we are proceeding to the analysis and recording of business transactions. So number one, we are going to identify the transaction from source documents. Number two, indicate the accounts, either assets, liabilities, equity, income, or expenses affected by the transaction. Number three, ascertain whether its account is increased or decreased by the transaction. And lastly, using the rules of debit and credit, determine whether to debit or credit the account to record its increase or decrease. So we are proceeding to the analysis of the business transactions leading to the recording or journalizing. Okay. Plus we have two entries. We have simple entry wherein two accounts are affected. There is one debit and one credit. Example is the entry to record the initial investment of owner in the form of cash only. The second one is compound entry. More than one debit entries or more than one credit entries. It may be one debit is equal to more than one credit entries or vice versa, meaning two debits and one credit. Okay, what is the example? Entry to record the initial investment of owner in which both cash and equipment were invested by the owner. So, in this case, we have two debits and one credit. What are they? We have cash and we have equipment as an assets, and the owner's equity, it is only one account. So two accounts for debit and one account for credit. Analysis of the business transaction. Let's discuss transaction number 1, which occurred on January 2, 2022. Okay, Masipag invested 300,000 to start an auto repair business. So, using the accounting equation, we have to analyze this first transaction. Masipag invested 300, therefore, cash is to be debited for the amount of 300. And Masipag capital as owner's equity is to be credited for the same amount of 300,000. Okay, so what's our entry? The entry is debit cash and 300,000 and credit Masipag capital 300,000. So there is a need to write the explanation, a brief explanation. The explanation would be to record the initial investment of the owner. Class, may I remind you that before journalizing, we have to refer to the chart of account adopted by the company. So we have a statement of financial position account and statement of comprehensive income account. What are the accounts for the statement of financial position? We have assets, liabilities, and owner's equity. So this is the what? The same way the accounting equation. Accounting equation. So, assets equals liabilities plus owner's equity. So, remember that under the asset account, it may be started with 100, 1,000. Okay, it depends upon the choice of the company. While the liability starts with 200 or 20 or 2,000 or what. But it is always started with 2. How about owner's equity? Started with 3. 30, 300, 3,000, something like that. How about the statement of comprehensive income account? We have income and expenses. So, we have uh, repair income as an example, and then it starts with 401. Okay, and then expenses started with 500 or 5,000 or 50. It depends upon the company who adopted the chart of account. Let us analyze these transactions using the accounting equation assets equals liabilities plus owner's equity. For the transaction that occurred on January 3, Masipag invested 300,000 pesos to start an auto repair business. We are going to determine the assets. So we can use the cash. Okay, cash is increase. Upon investment, the cash was increased. Okay, please remember that. And then, what is the counterpart account for this transaction? Remember, it was an investment. So, we can use masipag capital. And this is also increase. Okay? Number 2 or transaction on January 5, Masipag invested one set of computer amounting to 30,000 pesos and office table and chairs worth 9,000. Let's go to the chart of account and find out the accounts appropriate for this transaction. So, look at it. Office furnitures and fixtures. So we can use this for the uh, tables and chairs. And how about for the computer? Yes, office equipment. Okay. So office equipment. Okay. Increase. So, how about tables and chairs? We will use the office furnitures and fixtures. Okay, so increase. How about the other accounts affected? So we can use also masipag capital and it is likewise increase. Okay? Next is the business borrowed money from Co-op Bank 360,000. So let us see the chart of account. What is the appropriate account for the borrowed money? So under liabilities, we have accounts payable, notes payable, unearned income, utilities payable, loans payable. Okay, that's it. We have loans payable. So loans payable for, no, this is for this one. So loans payable and then increase because what? Loans was granted. Okay, to masipag. And then what is the other account affected in this transaction? Borrowed money. So, proceeds of loan is cash and it is increase. So, balance. Increase in assets, increase in liabilities. Okay, how about on January 7, the business hired Miss X as new bookkeeper and contract was signed for the rate of 9,000 per month. Okay? Is this considered as business transactions? Okay. This will be no entry. Why? Because the new bookkeeper did not render its service. It's just contract signing. Okay? And no payment was made for that transaction. Okay, January 10, received cash for repair service 5,000. So what is received? Cash. So cash is increase. Cash is increase. Okay. How about the accounts affected? Other account or accounts affected? Okay. Yes. So we are going to record the income. So let's go to the chart of account and see what is to be used. Okay, under the income, we have repair income and interest income. So the appropriate one is repair income. Repair income. So under the owner's equity, the income will increase the owner's equity. Therefore, it is to be credited. And if it is to be credited, it will increase the owner's equity. Okay. You have any question? Can you follow? Okay. Very good. Okay. To continue, let us analyze transaction on January 14. Build the following for repair service rendered. Miss Nancy, 3,000 pesos. Mr. John, 25,000 pesos. And Miss Ann, 3,500. The accounts affected year is accounts receivable. So we have to write accounts receivable. And this is an increase. Did you get it? When we say build for repair service, it is considered as accounts receivable. Now, what is the other account that was affected by this transaction? Take note of the words repair service rendered. If it is the case, it is considered as an income. Therefore, there will be an account that will increase the owner's equity and we have to credit it. In order to increase the owner's equity, we have to credit it. Okay? So, we have repair income. And this is an increase. Let's go to January 17. Both office supplies for cash, 900 pesos. We are going to use the asset method. Therefore, there is an increase in office supplies or office supplies. So this is an increase. And then, since we paid it for cash, the affected account is cash account. And this is decrease. Because we have to to credit cash to what? To decrease cash. Because the normal balance of cash is debit. And in order to increase the cash, you have to debit. Now, in this case, cash is to be credited. Okay. Now, January 18, the owner withdraw cash for his personal use, 10,000. We have the so-called contra owner's equity. And it is drawing. So, if we have masipag capital in this example, we have masipag drawing as contra owner's equity. So, we know that owner's equity is credit. Therefore, in order to decrease the owner's equity, we have to debit the account And since it is a contra, therefore, it is the opposite of credit. So we have to debit masipag drawing. And this is to decrease. Again, we have a payment of cash of 10,000. Therefore, the cash is to be decreased. We have to write cash decrease. Okay. Did you get it? If the owner withdraw cash for personal use, your entry would be masipag drawing and then credit cash. 19. Paid 30,000 for 3-month rent. Okay, let us go to the chart of account. If we can see the account title that is pertaining to the prepayment. So we have prepaid rent. Yes. Prepaid rent is an asset because the company is using the asset method. So, prepaid rent increase and the other account is cash. But by this time, cash is to be credited because of the word paid. So, cash is credited in order to decrease. Okay, paid salaries of the employees 15,000. Take note again of the word paid. Therefore, our cash will be decreased. So, the first item that we're going to take up is the salaries expenses or salaries expense. And this is increase or decrease. This will be deducted from owner's equity. Therefore, it is to be decrease. It is a decrease in owner's equity. Okay? What is the other account affected? The keyword here is paid. So, cash again is decrease. Okay? The last one, January 28. Receive a promissory notes from Mr. John for repair service rendered 17,500. Okay? Let's see if we have an appropriate account for promissory note. Let's go to the asset account. So we have, yes, we have notes receivable. We can use that account title. Okay? Notes receivable. Okay? So this is an increase. And then, take note of the word repair service rendered. Therefore, it is what? It is a repair income. So we can copy this one and paste here. So we have done analyzing these transactions. Any question? None? Okay, very good. Let me introduce first the general journal or the book of original entry. This book is used to record the business transactions after analyzing those transactions. Look at the illustration. This is the name of the journal. And then this is the date wherein you are going to write the year for every page of the general journal. And then write the month and then the date. Remember that in recording the business transactions, you must write it chronologically. When we say chronologically, it is by date. You have to observe the occurrence of the transactions. The other one is the descriptions or particulars. You're going to write your debit and credit entries and also the brief explanation. Remember that the credit side is to be indented by at least 5 spaces. Then, here is the PR or folio column. For your initial uh, activity, that is journalizing, you have to leave this portion blank. You will use this portion when you are posting the entries to the general ledger. It is the post reference. Therefore, when we say post reference, it is applicable for your posting entries. Then we have debit and credit. Okay? Sometimes this is only DR or short or the abbreviation for debit. And this one is CR, an abbreviation for credit. We have the so-called place value. This is the centavo. Then ones, tens, hundreds, thousand, and so forth and so on. Okay, same with the credit. Okay, since you are now familiar with the general journal, let's continue journalizing. Are you ready to record the transactions that we have analyzed a while ago? So, let us record or journalize those business transactions. So, start with writing the 2022. And then, the month is January. Okay? And then, our first transaction is on January 3. And if we are going to return to the analysis, so cash is debited and masipag capital is credited. So, debit cash, 300,000. Correct. So, 300,000. Okay? And then, our credit is masipag capital. So, 1, 2, 3, 4, 5. We have to indent for 5 tab. So, masipag capital. The same amount. So, let's copy. Okay. Here. And then our explanation would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So, to record the initial investment. Okay? Okay. On January 3, Let's go back to the analysis. On January 5 rather, Masipag invested one set of computer, okay, office equipment, and then table and chairs, office furniture and fixtures. So let's copy this. Okay, increase, so debited. Okay, okay, so write 5. So do not write January anymore. Okay, so the amount for office equipment is what? How much? 30,000. Okay, so 30,000. 30,000. And then the office furniture and fixture is 9,000. No. Okay. And then we can copy this one and then we are going to edit the explanation. Okay. So, how much is the capital again? 39,000. Okay, 39,000. Then, we are going to edit this one. Instead of initial, we're going to make it additional. Okay. And then next is on January 6. Okay, let's go to our analysis. January 6, what happened? The business borrowed money from Co-op Bank, 360,000. So, we're going to debit cash and credit loans payable. Okay? So, 6 is cash for debit of how much? 360,000. So, we can copy this, the same place value, and then edit the amount. Okay? So, 360 as simple as that. But you cannot do this in your on your paper. Okay, so 360. And then what is this? Loans payable. 1, 2, 3, 4, 5. Loans payable. Okay. And then our explanation is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to record the proceeds from loan. Okay. As simple as that. Okay, next. After January 6, what happened? So we have a transaction. Okay, let's go back to the analysis one. Okay, there was indication there that no entry, so we don't have to write no entry. Okay, unless it is in actual, you cannot do that. But for classroom this for classroom purposes, you have to write. But let us assume that this is the actual, okay? Actual scenario. Therefore, no entry in 7. So, let's go to the January 10. Okay, 10. What happened on January 10? Receive cash for repair service of 5,000. So, cash is debited. Cash for 5,000. Okay? So, 5,000. Okay, and then this is an income. So, we're going to credit the repair income. 1, 2, 3, 4, 5. Repair income. Okay, capitalize ang in. Okay, for 5,000. So let's copy this and paste. And then our explanation would be what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. To record what? To record to record income to record income for service rendered. To record income for service rendered for cash. Okay? Okay, next. What happened on January 14? January 14, okay? So, billed. So, accounts receivable. How much is this? 3,000 plus 25,000 plus 3,500. Okay, we computed it as 31,500. So, this is an example of accrued transaction, accrual. Okay? So, 14. We have accounts receivable. For how much? Okay? It is 31,500. Okay? And then, this will be repair income also. So, we can copy this. Okay? And then, copy this. 31,500. And then, we can edit this an account instead of forecast. An account. Because receivable. Okay. Next. Next. Office supplies. Okay. 17. Both office supplies, 900. Okay. So, this is 17. We're going to debit office supplies. How much? Yes, 900. Okay. And then, it says that it was paid. So, word paid, therefore, cash is credited. 1, 2, 3, 4, 5, cash. For 900. Okay? Our explanation. What's your explanation? Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. To record this purchase office supplies for cash. Okay? Now, how about January 18? Can you recall that? Okay, let's go to our analysis. January 18. Okay, the owner withdraw cash for his personal use, 10,000. So, we're going to copy the masipag drawing year. Masipag drawing. Okay. And then, edit. How much? 10,000, right? Okay, and then we're going to credit cash because cash is paid to masipag. So 1, 2, 3, 4, 5 cash. Okay? So copy the copy. And then our explanation is to record cash withdrawal. Withdrawal by the owner. Who is the owner? Masipag. Okay. After 18, what happened? After 18, let's go. So 19. So let's copy this. 30,000 is paid. Okay. And what is the date? 19. Yes. So, okay. And then edit. Edit. 3. How much is that? Is it 30,000? Yes. 30,000. Okay. 30,000. Okay. Same amount. Therefore, let's copy. Let's copy. Okay. Okay. So what is our, okay? We have two indent. 1, 2, 3, 4, 5. And then, what's our explanation? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. To record, prepayment for rent. So, that's it. Okay, how about salaries expense? Tama? Correct. Okay. So, paid salaries, 15,000. Therefore, our entry would be debit, salaries expense, for 15,000. Okay? 15,000. Okay? So we paid. So we're going to credit cash based on our analysis. 1, 2, 3, 4, 5 cash. 15,000. Okay? Did you follow? Okay, what's our explanation here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So to record, salaries paid to employees. Okay? Yes, last transaction. And that was 28. Okay, notes receivable and because received promissory notes. Okay, so 28. So 28 is notes receivable. Okay, this one. Notes receivable. How much? Okay, 17,500. 17,500. And then, this is repair income. So, 1, 2, 3, 4, 5. Repair income. So, 17,500. Okay? Any question? Question? Do you have question? Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. To record the promissory note, the received promissory notes. Okay? Did you get it? I hope you learned a lot in this discussion. Okay? So, thank you for watching and I hope that you learned a lot. Thank you for watching. Okay?